Next up, we have a fireside chat with New Gold. Please help me welcome Pat Godin, President and CEO of New Gold. Hi, Pat. Great to see you. Thanks. So, Pat, welcome to the conference.
Thank you.
For the audience here who might not be familiar with New Gold, can you give us a brief overview of the portfolio?
New Gold is a Canadian mining company with a head office in Toronto, and we have 2 assets in Canada. So we are mostly producing gold. That is representing 75% of our revenues, and 25% of our revenues are coming from copper. 2 mines, one in Ontario, is the name of the mine is Rainy River. We use a combination, an open pit and underground mine. This year, 75% of the ore release is coming from the pit, 25% from the underground. And the next 3 years, we will average 300,000 ounces of gold in the asset for 25, 26, and 27. New Afton is lowland BC, is the only block caving mine operation in Canada for now. We are ramping up the block cave number 4, the C zone, that is will reach 16,000 tons per day from underground. The C zone will also double our gold and copper production in the next years. So Rainy River is having a mine life up to the end of 2031 and 2033, sorry, and New Afton 2031.
Excellent. New Afton is a site that I've visited. It's a beautiful operation.
Yeah, it's a nice place to be, right?
Absolutely. And New Gold has been one of the best performing mining stocks over the last few years. Can you tell us a little bit about how you were able to achieve that?
Yeah, I think it's a journey. It's not necessarily just due to me. So my predecessor did an amazing work to restructure the balance sheet. So the company had difficulties and was forced to sell asset and also to sell a part of New Afton to complete the construction of the block cave. Block cave and C zone is representing $585 million US of investment. So we had no capacity to finance that totally. So we sold 46% of the asset to teachers at that time. So my first thing with New Gold was to be known as a miner of choice, to deliver the guidance as we planned to. So I think we did this. We reinforced the team. We changed the culture in the company. We changed also mainly the safety culture. It was something that I really care about. And also in 2023, we were able to generate liquidity to begin exploration and significant investment in exploration. So we were able to expand the mine life of Rainy River by 2 years last year and extend the pit by 1 year. So at New Afton, we renewed 2 times what we mined in 2024. And at New Afton, I can talk more after, but we made an excellent discovery in the end of 2023 with Key Zone, and we are targeting, our objective is to develop another C Zone with Key Zone this year.
Exciting. And going forward, how do you see your free cash flow profile evolving, given that you've just invested large amounts of capital at both New Afton and Rainy River?
Yeah, the disadvantage of the block caving mining method is that you put all the investment up front compared to the other mining method. However, when you are mining, you are harvesting, and it's low cost. That's one thing. At New Afton, at Rainy River, the major pushback will be completed this year. So it means that in the next 3 years, at the consensus price, we'll generate mostly $2.ish billion US of free cash flow. At spot, 2.5. So basically, it's excluding exploration investment in 26 and 27, but it's not what will cannibalize the cash flow that we'll generate. But also, as we expect to be successful with the exploration, we'll probably use a part of this capital to expand our resources in a timely manner.
Right. And at New Afton, I know you guys sold an interest to Ontario Teachers a few years back, and you've recently completed the last buyback of the 19.9% interest that they had in the asset. Can you talk a little bit about the rationale for completing that buyback and the thinking around that?
Okay. So multiple aspects. On a due diligence point of view, we have no risk. So we operate 100% of the asset and you own 80%. So basically we're doing all the job. Secondly, teachers, they had investment imperative or criteria that are different maybe than other investors, but we were able to reconduct the same parameters in terms of PNAV that we did last year. So I think it was an excellent investment. Our motivation also is that last year when we bought, they had 40% GV ownership and or 42.5% free cash flow. Last year we bought back 22.6, and this year they came to us, hey guys, so we're interested to sell it. So and we agreed on the price, and I think we did an excellent transaction. Last year we raised equity. This year we did not dilute shareholders. So we did that with a prepay for 100. We use our revolver for 150, and we use cash for 50. So and we expect to refill the revolver before the end of this year. And because we expect to generate significant amount of cash flow in the second half of the year. And also we repay the prepay by 50%. So basically it's going to be good for our cash position in the future. The motivation for New Afton, it's multiple. This mine is mostly we're connected to the grid, so to be in Quebec, Newfoundland, or BC is the best place to be in terms of not necessarily the cost of the electricity, but the quality of the power too. So if you want to draw on the line, the lights will not go down. So it's important for us. The majority of all the material handling on the ground is electrified. So we have, so the mine is 1,200 meter deep, and we're all using conveyors. 50% of our fleet is battery vehicle. So basically we're not dependent to fuel. So it's excellent to look at our ASIC looking forward. We have a mill that is pretty versatile. So we have 3 strides of grinding. So we can mostly float majority of things happen. And the metallurgy in C-Zone is pretty easy compared to the first lift, where it was more complex. We can ship by rail and by boat. So that is pretty special in BC because so it means that 50% of our concentrate is shipped to the horn smelter in Quebec. I'm really pleased to have a Canadian feed for the horn. It's important to preserve the only smelter that is remaining in activity in Canada, and I think we need to make an effort to keep this smelter in operations. And otherwise we're shipping by boat. So vessels in China, in Japan. So our concentrate is a high quality concentrate. So we're not selling in China because the concentrate is having contamination in this. It's very high quality. We invest when we deploy capital in C-Zone, they invest before I joined, it was great success, 140 million Canadian in a ticket tailing plant. So basically we increase the density of the tailings to 65% solid, and we dispose the tailings in the Afton pit. It means that when C-Zone will be mined out, at the end of 2031, we have room for another C-Zone without any capital investment. So if you look in the current context in Canada, mainly with what happened in Mount Polley and BC, to not be subject to permitting issue and not impacting the land, it's great for us. We have a highly qualified workforce. We have 6.7% of turnover, so it's mainly managed retirement. Compared to the other place, it's mostly it's a really nice residential mine in Canada. Kamloops is 100,000 citizens. They have an hospital, they have university. So if you have a family there, the kids can stay up to a longer period of time, and it's gorgeous. You can go ski in BC, So
yeah.
Cannot have better place in Canada, so it's a nice place. And we deploy a lot of effort and investment in technology. So originally, C-Zone, it was supposed to be a 14,500 tons per day operations. But we have a 5G network on the ground. We deploy a lot of time and effort to add automation in our operation. So it increased our productivity by mostly 10 to 12%. And now we will extract at 16,000 tons per day. So it's improving our ASIC. And also it's improving the quality of life of our workers. So all this combined together, it's our flagship. We're seeing a lot of upside in exploration. I talk about Key Zone.
Yep.
So that was mainly all this combined together. It was, for me, it's a high sort of great motivation and a low-brainer when was the time to make the decision to buy them out.
Makes a lot of sense. And speaking about exploration in K-Zone, I believe you guys are embarking on a 100,000 meter drill program this year.
Yeah, mostly it was 58.
Okay. And so can you discuss the goals of the drill program and what you hope to achieve?
Yeah, so currently we have, so in my life up to the end of 2031, our objective is to bring this mine beyond 2040. Okay? And we have, under C-Zone, we have an indicated resource that is defined with D-Zone. On the upper left, we have an Engwall zone that is defined as an indicated resources too, ready to process reserves on this. But we want to define Key Zone to have a global approach because we need to look at the subsidence and combine the best NAV for the operations. So C-Zone we developed last year, we mostly invest $15 to $17 million US in Key Zone from the upper lift. This year, as we have more capacity in development capacity, we push a drift of 700 meters at the horizon of C-Zone extraction level. We have currently having 5 drills, and we'll have 2 drills, and we'll have 5 drills before the end of this month.
Okay.
We're gonna blast it. And we want to we're looking for the same type of block cave C-Zone, 30 million tons, mostly the same grade. So it will bring us, if we are successful with that, it will be a mix of Engwall, Key Zone, and D-Zone together. We want to improve the NAV, reduce the weight of the capital looking forward, and keep this mine always cash flow positive up to beyond 2040. That's our objective with New Afton, and I think for that we need to massively invest in exploration, and I think we're on a good path for that.
Exciting. And you know, within your portfolio, there's a lot of great upside opportunities, but looking, you know, farther afield, where do you think M&A is in the cards? What's the strategy for New Gold on that front?
That's the 10 million questions. You know, it's a tough one because first that we'll talk about what we can control. This year, our strategy was to preserve our liquidity, to be able to keep our powder dry, to be able to take action. So we roll our bonds. Our bond were due for 27. We extend that to 2032, $400 million US, and we did that under better terms. We also extend our revolver facility to 2029, and we top it with an accordion, an additional $100 million to preserve flexibility in the future. We look at and our easy acquisition was to do teachers, the 19.9%, it's what we did on May 1st. So I think we did a lot of work, and also our technical report were obsolete. New Afton, it was dating of pre-COVID. Rainy River, we did a lot of improvement in the last 2 years, so mostly the last one was not reflecting the reality. We filed that, so for the market it was important because they have no visibility on the mine life and the reserve point of view. So I think we cleared this out. I think it was really well received. Now we are looking at what's next. The turf is becoming smaller. So recently we had transaction. So the dream, we'll say, will be to bolt a productive asset to New Gold before to build something. That's going to be our main objective, but it's easy to say, not easy to do. But we're pretty active actually in the market for this.
Okay, excellent. And it looks like that's all the time that we have. So thank you very much, Pat.
Thank you very much.
Always great to catch up.
Thank you.